Hi, we're here today to demonstrate how easy and powerful the Easy Business Case Financial Calculator can be for your business plan. Little note before we get started, this is a cash accounting model, and if you have significant accruals or time periods between recognition of revenue and the receipt of that revenue, or payment of expenses and the recognition of those expenses, then this is probably not the right tool. If you don't know exactly what I'm talking about, then this tool is probably okay for you. Now, the business case calculator is not going to be able to know your business. You're going to have to tell it about your business. So there's a little bit of homework you need to do before you can actually use this tool to model your business case. Today, what we're going to be doing is developing a business plan, financials for an app development company. I've done my homework and I have jotted down on a piece of paper some assumptions regarding revenue, startup expenses, and ongoing expenses. Now, for revenue, we're going to be distributing apps. Now, we expect to have 5 apps at the 3-year mark with 1 million users. Now, that's going to be phased in over a few years, where we expect to reach that million at year 3, but only 250,000 in year 1, 700,000 in year 2. After that 3rd year, we're going to expect to achieve a 10% growth. We're hoping to make about $3 per app per year in revenue. Now, startup expenses aren't real significant for our business. We're basically working from our house and we have no office or build out. We did most of the company setup ourselves, so we have about $500. We had to set up a website, had some legal fees for privacy policies and some contracts that we had to make, and we had to get some initial computer equipment in. So we have total startup expenses of $26,500. Now, ongoing expenses, of course, are more substantial. We have 3 employees, about $500,000 all in, salary, benefits, etc. Now, an interesting dilemma is whether you include yourself in a business case if you're starting up your own company. And I have chosen to include myself in this business case because I could be spending my time doing something else, so I really need that as an expense to show that I've spent my time doing something. Now, we got ongoing legal expenses, equipment licenses, got some insurance costs, some HR admin where we've consulted that out, marketing budget, which we have a $20,000 flat that we use to get into magazines and such. And then we spend about $2 per app in, different social media, advertising, and app stores. Now, app stores also take about 30% of our revenue in proceeds that we sell through the app store. Now, not all of our proceeds come from revenue generated by app stores. Some of it comes through advertising and other means. So we split that about 50-50, and we're ending up with a 15% of revenue charge from the app stores. Okay, now let's get into the actual model. I'm going to come here and I am going to load it up. Now, when you first come in, you'll have a simple business case that you can go and look and see if this app's right for you before you actually buy. If you decide to buy, the app is relatively cheap, probably the cheapest thing you're going to encounter in developing a business case. It's only $2.99. Now, I've already purchased, so I'm going to create a new business case. Now, for the new business case, I'm just going to name this AppCo for App Company. Oops, helps if I spell it right. And I'm going to hit create. Now, there's different ways. You get your final reports, but we haven't done anything, so there's nothing to report. We haven't done anything, so there's nothing to save. Now we got to set assumptions, tell it about our business. So we can either fill these in through templates, or there's a nice little thing that says walk me through it. So I'm just going to hit walk me through it. So now the first question we come up with is, how long is the business case for? Well, my company, I'm expecting it to be indefinite. Well, I can't do a model that goes on forever. So I'm going to pick 20 years. And the reason why I picked 20 years is after 20 years, if I'm discounting back to a net present value or any IRR, after 20 years, that tail isn't going to affect the calculations too much. If I go longer than 20 years, you'll find out that it takes a while for the model to run, and I just don't want to wait that long every time I run it. Okay, I'm going to hit next. Now here I can select whether I want to project units and price per unit, or whether I want to just type in my revenue. Now, as I showed earlier, I have expenses that are per unit expenses, so it's very important for me to type in my units and my price per unit. Same thing if I was doing, let's say I was a consultant, I might want to type in billable hours and my price per hour, or if I'm selling widgets, I would type in my number of widgets sold and my price per widget. But if you wanted to, you could just type in a flat revenue for each year. So I'm going to choose units and price per unit. Now I can enter my assumptions for up to 5 years individually, and then after that it'll let me have a growth rate that attaches to the last year and then just projects at that rate from there on out. That lets me have different growth rates in the first 5 years, and also gets me get more detailed for the 5-year business plan. Now, since I'm going to expect to reach my steady state by year 3, I'm just going to put in 3. Now I hit next. Now it's going to ask me for my number of units sold in the first year, and I had said 250,000 units. I'm going to hit next, and it's going to ask price per unit. I'm going to hit $3. Now, the next year I expected to sell 700,000 units. And I'm gonna have a growth rate, expected growth rate of 3% on my unit price. And since I'm typing it at year in year, I'm gonna put 3.09 and hit next. My third year, I'm going to reach my 1,000,000 units that I discussed. And then I'm going to put 318 as my price per unit. And hit next. Now after that, it's going to ask me for what's my growth rate and number of units sold. And I'm expecting a 10% growth rate. You need to type in things that are as decimals, so I'm going to put 0.1. And then it's going to ask me my expected inflation, how much I'm going to raise my prices, or that my revenue per unit is going to increase each year. So I've already mentioned that I'm going to do 0.03. Okay, so enter any setup costs that are expected to be paid. So these are my startup expenses here. I'm going to enter the $26,500 that I previously mentioned in my homework sheet. Now, I had a year 1 expense, and then I'm just going to increase that with inflation when I talk about my fixed expenses. This was my salary, some of my legal expenses, my equipment, my licenses and such. So when I add up all those things, I had 528,600. Okay, now my inflation rate, I'm gonna again put about a 3% inflation on there. Now I have my price per unit. I talked about including a $2 per app unit, price per unit. That's my expense per unit, sorry. And then I'm also going to inflate that at 3% per year thereafter. And then I have any expenses that are related to the amount of revenue generated. I talked about the app stores taking 30% and 50% of my revenue coming from app stores, so that my net cost per revenue was about 15%. Now, the next one is just in case you have expenses that are not tax deductible by your local tax authorities or your federal tax authorities. Here I'm just going to assume that all my expenses are tax deductible, and I'm going to just go next. Will there be a loan to help fund the business case? Right now I'm going to say no. Next one is income tax. So what's your effective tax rate? It's 25% plugged in here. I'm just going to use that. Now, will there be a loss carry forwards? Loss carry forward is basically will you get negative income tax? And most taxing authorities won't pay you. So if you make a loss, you won't have to pay any income tax, but they're not going to give you any of that loss back as negative taxes. So this is basically if you have other income that you can offset this against, or whether you are going to have to carry that loss forward. Now I actually have a spouse that is going to make other income that I can offset this against because I'm running this through as an LLC. And there I'm going to say, no, I'm not going to carry my losses forward. Okay, so this next one is going to be, is there a minimum cash reserve? This is an amount that you always want to have on hand, that you're basically going to dividend everything out as soon as you can to be able to use that money for something else. But is there any monies that you want to retain? Maybe it's your lender that's saying that you're going to have to keep a certain amount. Maybe you just always want to have a certain amount to be able to pay your expenses for the next month. So I'm going to say that I'm going to need $40,000 on hand at all times. And then after that, my investment income rate on any cash held by the company. So I'm not really investing heavily, so I'm just going to say I'm going to earn 1/4 point. For investment income. Next one is my hurdle rate. My hurdle rate is really, am I going to do this deal or not? Would I rather invest in the stock market or in a CD or something, or do I want to do this business case? Is this where I want to put my money? Now, if I say, in order to do this, I expect to make a 10% return on my investment, that's going to give me the metrics to see whether I can do that. Now I'm going to hit reports. Now this will take a couple seconds because I'm projecting 20 years of financials. And here we are. So here's the first tab that's going to just give you some basic stats. So you can see this is going to take a $463,360 as a required initial investment on my part. I have an IRR of 30.2.7, which is excellent. I wish I could get that return in anything I do, but the net present value obviously is positive because my 32.7 is higher than my hurdle rate of 10%. And I have a payback period of 6.4. That's a little bit longer than I like. That's the time period that's going to take to get my money back. You can see growth rates in both units and revenue, where I have significant growth in the first couple of years, and it slows down to the final assumptions by year 5. Now I can come over here and look at my 5-year plan, and this shows me my units going up, my revenue, all my expenses, and some other metrics down at the bottom. I have a nice chart here that I can use if I need to demonstrate what my business is going to do to anybody. A nice little graphic that shows revenue, expenses, income, and then units moved. And then I have a breakdown of the expense detail from the 5-year plan, just because I lump all the expenses on one line there, but the expense detail can be seen here as broken out. Okay, this is great. Sorry, we're going to go back, and now I'm going to save this. It's already got the name APCO populated, so I'm just going to hit save. Okay, great. And I can actually go out. I can see APCO there. Great. Okay, I hit APCO. I'm going to load the business case again. This time, I don't have $500,000 laying around to invest. I can probably come up with half that, so I'm going to add a loan to this. Now, I'm not going to go through the walkthrough again because that would be a lot to go through when all I want to change is a loan. So I'm going to go to the loan screen. Now, the loan I'm going to take out $350,000 because I have $250,000 I'm going to initially invest, but I'm going to have to make payments on this loan in the meantime. So if I take out the other $250, I need to make the $500, then I'm not going to have the money to pay back the loan in the time period till I break even. I'm going to leave 10% interest rate, and I think I'm going to try to get that loan for 120 months. Now, you can have different loan term in months and different payments, but right now I just want to have it the same. Now, when I do that, it's going to calculate my payment, so I'm going to have a loan payment of $4,600 per month, and now I can go out, and what I'm going to do is I'm going to run the reports. Now this is going to take about the same amount of time it did before because it's really the number of years that really makes the difference in how long it takes to calculate. So now you can see now I only have $240,000 as my initial investment. I have a $350,000 initial loan. Now because of the leveraging effect of loan, because I'm using somebody else's money, what's going to happen is my IRR is going to go up. Before it was 32, almost 33%. Now it's almost 39%. That's just the leveraging effect. But when I come here and I go and look at my income, now I have something where I'm paying loan interest. Now I do have the principal repayments down here that show me how I'm paying back the loan, but this is my actual cost of the loan interest, so I'm making less money, but I put in less money of my own initially for the higher return. Same thing with the chart and expense details. Now I can come back. Now I'm going to save, but I don't want this to be APCO. I don't want to save over what I did before. So what I'm going to do is I'm going to call it APCO with loan. And I'm going to save that. My business case has been saved. Now I'm going to go back, and there I have it. I have APCO and I have APCO with loan. Now, the power of this tool is not only can I just look at what happens if I add a loan, I can look at what happens if I make $3.50 per unit instead of $3. What if my marketing expense is $1.50 per app instead of $2, or maybe it's $2.50 and I'm going to get hit harder? What happens if I don't sell as many units, if I sell more units? I can run as many scenarios and save as many scenarios as I want and calculate all the statistics. And then if I'm putting a report to go to somebody, I can screen print and copy and paste all of these into a Word document or some other business case template that you might have. So I hope this video helps you, and I hope you for great success in whatever your business venture is. Thank you.